Hey everyone, Lance here. I want to go over proactive versus reactive reactions in the market because volatility is high. The Dow was down 3,000 points yesterday. Today it's up about 1,000 plus points. But what I want to do is show you these candles on these charts and really go over that mindset, especially right now with the market being volatile, of us as human beings and especially as traders and investors on the way we react. So we've seen this multiple times. Green day, red day, green day, red day, green day, big down, red day, green day, red day, red day, big green day, red day, big green day. So what's tomorrow going to bring? Nobody knows. I mean, let's just be honest with you. Nobody knows what tomorrow's going to bring. So that in itself is very, very difficult to react. If we go with the pattern, because we're traders and we like patterns, tomorrow will probably bring a red day. But again, we have to wait and see. But the concept of buying and selling, it shouldn't be a concept of what is my opinion on the markets or what is my opinion on the stock. For example, if you're watching the markets today, it's a little afternoon, and you're saying, wow, I'll pull up the Dow here. Wow, look, the Dow is up 840 points. I'm going to buy it. Then I come to the question of, well, why didn't you do that yesterday? Why didn't you do that earlier today when the Dow was flat or maybe up 100 points? Why are you doing it right now? And I will also say, if the Dow falls 1,000 points tomorrow, what will you do with your stocks that you bought? Or what will you do if you bought the Dow ETF? Will you be comfortable owning it? So buying on big up days, that's reactive trading, okay? Buying when the market is down, when there's blood in the streets, because you think stocks are cheap or that's where you want to pick a position. Maybe you just want to flip it within the next day or two and you think tomorrow's going to be an up day. That's more proactive trading. And the way you can also be very proactive in your trading is, let's say you're wanting to buy Apple and you've been waiting for a dip for years, right, here in Apple. And you thought it was expensive at 300 and now it's pulled back to 253. What you can simply do is right click on any chart, create an alert, click below, and let's say you just want to own Apple at 240 and you don't care what the next few days bring. 240 is your long-term buy on Apple and you really love it. Set a mark, set a limit order, create it. When it gets tagged, you know Apple's right around that 240 mark. Boom, automatically executed. You don't have to sit and wait. You don't have to buy it here today at 253 thinking, oh man, I'm paying $13 higher than I originally wanted to. It will really save you time. And in markets, I'm talking about today, right now, with option volatility high, you're seeing large moves in these stocks that we haven't seen in years. You really want to be proactive in your trading and investing. I cannot stress that enough because I've seen over and over again over the past really 2 to 4 weeks, traders see a big green day in the market and they say, yes, the path is clear. Everything's good. I'm going to buy stocks. And then the next day, you know what they do? The market's down. They sell their stocks for a loss and they shake their head. And then they repeat the process over and over again. Eventually, you're going to get tired. You're going to get worn out. So proactive trading, set your orders, set your marks, your alerts, and most of all, when you do get into a position, let's say you want to nibble in, make sure two things. You're confident in the position and you're comfortable, whether the stock goes higher or lower from your price level. Two most important things: confident, comfortable. Thanks, everyone.